Hey, so today's session from CB Insights provided a data-driven look at the 2025 InsurTech Top 50, and it's a list of the top 3% of global startups that are reshaping insurance. In total, these companies have raised $3.6 billion to date and over $600 million in 2025 alone, despite a tighter funding climate. Nearly 60% are early stage, a 20-point jump from last year, which signals a new wave of innovation entering the space. Three main takeaways stood out for me today: that SMBs are fueling growth, particularly in commercial and in health benefits insurtech, and the AI agents, they're everywhere, not just a trend, but a new operating model that's spanning underwriting, claims, and operations. And that personal lines remains ripe for disruptions, especially in homeowners, where affordability and coverage gaps create big opportunity for startups like Delos. Jane from Sixfold explained how their platform acts as an underwriting brain that ingests carriers' risk appetite and returns not just analysis, but the decisions itself. Their clients, including Axis and Guardian and Zurich, they've seen at least a 30% increase in gross written premium. Cycle times, they've also dropped from 2 weeks to minutes. Their newest capability, the referral agent, layers on top of the core model to handle underwriting referrals and draft communications automatically. Jane's advice for carriers evaluating AI vendors: ensure SOC 2 Type 2 compliance and responsible AI standards, anchor on real business value, not AI for AI's sake, and choose partners who integrate seamlessly into existing workflows rather than forcing change. Kevin from Delos, he shared how his company is tackling California's most complex risk environment, wildfire. While many incumbents they've exited, Delos has grown by rebuilding the model from the ground up. Their MGA structure embeds wildfire science at every level, at underwriting, at pricing, and in reinsurance. They've partnered with a consortium of over 100 wildfire academics who supply proprietary research used by the U.S. Forest Service and other agencies. Instead of traditional vegetation-based models, Delos prioritized wind and weather data to reflect how climate change is actually driving loss behavior. That combination of deep science and nimble execution has given them a decisive advantage in the market where generalists have struggled to profit. So in summary, CB Insights has framed a clear picture of what defines the new insurtech leaders: data-driven strategy, AI-enabled execution, and a courage to solve hard industry problems. Sixfold and Delos, they embody those traits, one by re-engineering underwriting intelligence and the other by reinventing risk modeling for a climate-changed world. We're here at ITC 2025, and we just wrapped up a session here regarding CB Insights and looking at the InsurTech Top 50. But I think what was really fascinating is after we reviewed the Top 50, we heard from a couple of interesting InsurTech startups, whether it was technology-based or MGA-based, and Kevin Stein from Delos Insurance heard a really fascinating description articulating a problem with the old models, especially around wildfire and kind of really pricing those types of risks. Could you just articulate for our audience what that problem was and how you solved it?
Yeah, absolutely. So there's basically two problems. There's a business structure problem and there's a technology problem. Mm-hmm. The business structure is a third-party data model selling a single risk score to a generalist carrier. The generalist carrier wants to use sound actuarial methodology, right? Mm-hmm. They want to use years of loss history as their way of predicting the losses of the next year.
Right.
The problem is wildfire used to be a very stable peril, and all catastrophes were, sure, but now they're much more dynamic. The major impact on catastrophe insurance by climate change is the fact that they're evolving catastrophes at a far faster rate than ever before. Mm-hmm. Over the last 8 years in California, half of the years had a new type of behavior. Therefore, sure, the future doesn't look like the past, and that structure no longer works. Therefore, it's a specialist peril. You have groups that have area expertise in flood and hurricane and many other perils. Is very akin to cyber, right, where it is clearly a very quickly changing risk, and therefore area experts can handle that in MGA structure. Right. Well, wildfire now is that type of peril, mm-hmm, and therefore area expertise and specialists can keep up with it significantly better than the old structure. Mm-hmm. The technology is the other issue, where the wildfire modeling is based purely on vegetation. Right. The problem is the major driver of loss in wildfires today is wind and weather. There's a variety of details around the business structure and the technology of these third-party data models where they can't actually use wind and weather combined with vegetation to come up with fire behavior. Okay. But being hyper-focused on wildfire, having our entire underwriting basis based on the fact that we're getting this right means that we can spend the money, spend the time, get the area experts to be able to deeply understand and develop the wind and weather models that are proprietary and necessary to actually come up with an understanding of fire behavior in the climate reality.
That's really fascinating, Kevin. I got a question here for you because I work with a lot of capacity providers, and I'm thinking about what their potential approach would be to evaluating this new model, this new approach that you're bringing to the table. Did you have any trouble finding capacity and finding carriers that would understand your approach and offering you the capacity you needed?
We've been at this 8 years,
okay.
And so it's definitely been an ongoing conversation. Okay. We've been telling reinsurers and insurers sort of the same thing for a long time. Climate change will make wildfires worse. Others don't understand wildfire. They'll have a bunch of losses, and they can't insure something you don't understand. We do have a model that accomplishes that. So what we've been able to do is build a large portfolio, and a great example, a great test was the LA fires.
Yeah.
Obviously a human tragedy, however, very validating for our business structure and our model. At the time of the fire, we had 25,000 properties insured across California, including 7,000 in and around LA, a total of 75 million gross written premium, and we had 0 wildfire losses.
Wow.
The entire area, every square foot that burned, we called too high exposure to write, even though we claim that's only 20% of California is too high exposure to write. So we have a very broad footprint and didn't write anything in those areas. So came out with phenomenal results, validating the fact that yes, we can understand wind-driven superstorm wildfires.
Wow, well, it's kind of hard to argue with those types of results. One more tactical question for you, Kevin. I'm thinking about the types of data that carriers are used to seeing at that kind of coverage peril level, and they're used to seeing the pricing. Is there any difference in kind of how you guys are capturing the data and the data that you then transmit to carriers on a border road basis? Does that look different in your model?
So what we've been able to do is make everything that we do sort of behind the scenes.
Okay.
The difference is our wildfire scoring. Okay. However, we've been able to turn that, we disconnect it from the underwriting process. It is a static model that we update when we learn things in every year, but it just turns into simply a score that we can do in an automated format. Brokers automated a quote bind flow, 3 minutes to quote and bind, and then automate that bordereau out to the carriers.
That's phenomenal. Kevin, congratulations on such innovation. It's amazing. Ladies and gentlemen, this is Kevin Stein from Delos Insurance with an innovative way to deal with very, very highly specialized risks. Thanks again for your time, Kevin. Appreciate it.
Thank you.
Awesome.